Hi everyone, it's Evan here from the Trade Risk on Wednesday, March 29th here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. I hope you're doing well out there. Hope your trading's been going well. Let's jump into the charts here. S&P 500 finishing slightly higher on the day, up 10 basis points. And you can see if we go to the weekly chart, we're up almost 0.75% on the week. And that was after a very rough start. So let's go back to the daily time frame, talk about how we started this week. That was this session right here. Monday, we opened up across the board almost 1% to the downside, a gap lower. So didn't really get any follow-through panic off of that open. That was pretty much the bottom. You can see we opened up right here at about 230, just under 232, probed lower by about 20 cents. We did fill this gap. We talked about this open gap back here in last week's video, right around, basically under that 232. We filled that gap higher, and the bulls just took it, and dip buyers stepped in. There was not enough selling pressure out there. There was not enough fear or panic, or everybody was hedged up or had already sort of sold out or got worn out in here, and it proved to be sort of a dip buying opportunity. We closed the day at the highs. That was the first indication where, we had almost a 1% gap lower to open the day. We reversed it entirely, closed near the highs of the session. Breadth recovered nicely. So that was your first hint that there was some seller's exhaustion down here. Maybe you could, cover some shorts or start to look at some potential longs, or you wait for that follow through, and we did get that. So the next day, Tuesday, we saw a strong follow through to the upside. We didn't come back down and refill or retest any of these prior levels. We just beelined higher all day, closing above this little 3-day consolidation here and right into this prior breakdown, this prior support level from late February. And if we go to the cash market, again, we still get a little bit of a skew there because of the dividend on the SPY recently. You can see we actually recovered that 23.55 level. That was this support here, so the lows here back on March 9th, then the lows right here in late February. So 23.55 was recovered, and again, that was sort of the highs here just from last week in this little 3-day consolidation. So far, and today, of course, we finished slightly higher, but we are holding this 23.55 level. I think that's important. That's certainly the upper level momentum, bulls want to see that to remain the strongest sort of outlook going forward. We want to stay above 23.55. Now, if we do start to dip lower, I think that is fine, but we certainly don't want to start to unravel and give all of this back very fast. So I think staying up here, staying resilient, staying sort of complacent, even if it's some sideways digestion, even if it's coming back down to 234 or so, that all seems very reasonable and still kind of bullish action that we're hanging up here. However, if we start to just violently start to roll over, especially if we start getting back below 233.50, 233, if we start breaking back below here, then I think the worry is back on, and then the fear sort of comes back into the market. So for now, the bulls are stabilizing us just as we would like to see. There's been a series of clues here, basically starting with Monday's reversal, yesterday's follow through, today's continued stabilization on positive breadth. I think those are all sort of bullish developments. Not to say, not to say that we have to just keep zooming higher, but that is just to say that there is stabilization here. You're seeing some sectors kind of rotate amongst one another and start to pick up some slack. I think that's all very sort of healthy action. So again, I think the levels are pretty clear here. You have this trend line that you could start to sort of extend down here if you want to move it from these lower highs. Maybe we move back into this range. We didn't really take out yesterday's highs today, so if we can start to take out get above 236, maybe we move quickly back through the middle of this range and start to test maybe this trend line down here. Maybe that's a new sort of pattern that we're sort of carving out right now. Excuse me, but I think that covers sort of the high level view there. I think again, buyers are certainly stabilizing us. As far as let's move into the other major markets first. IWM, very similar situation here. So we had this big gap lower on Monday. You could see coming back down, testing this trend line, and also retesting kind of this double bottom here from the 22nd. Buyers stepped in once again, finished us near the highs of the day, saw the follow through, saw more follow through today. You could sort of extend this trend line down and say that we're trading in this downward channel, and maybe again, we have another day or two of upside before we start to pull back again and probe lower levels, maybe put in a higher low. I think the key level here, though, clearly 134. We have failed to close below that level. We came really close here on the 22nd. We closed right at it, and then of course we managed to close above it on Monday. So that is significant. That is major support going back to December of 2016. So staying above 134, 133 to 134. That's your general zone that you want to see the Russell 2000 continue to stay above, and the Nasdaq 100, the Qs, quickly coming back to the prior highs, almost recovered entirely this 1% plus sell day that we saw last Tuesday on the 21st, and we've almost recovered that entirely. And again, trying to get back through this trend line here that you can see drawn, this accelerated trend line that took that held up price throughout February and March. So bullish action there in the Qs, continue to be the leadership group. Russell 2000 is stabilizing, still the weakest link, but has stabilized, has demonstrated that it can hold major support. And the S&P 500, again, teetering and holding that 2355 level for that upper level momentum. So some encouraging action, something you can at least trade against. You have levels beneath you. As far as how we've been playing it, if you guys remember, think we discussed the hedge that we had on here. So we had long positions on. We were accumulating some long positions in here, putting long positions on, but we had a sizable sort of SPXS hedge on, so we were short the S&P 500 ever since this day here. That got covered, half of it on Monday. The rest of it got covered yesterday on Tuesday, and we remained just with those long positions on. So that's the way we're positioned, back to just being a net, we're always sort of net long, but exclusively long, no longer have that hedge on, and we'll continue to sort of scale, raise stops, and sort of play it that way. So still looking for a little more upside here, still looking to play on the long side. That's the way we're positioned right now. So with that, let's get into some of the other major markets. We'll go to TLT, which is still hanging up. Bulls are clearly not giving up without a fight here. This short-term trend remains higher. We're coming back and bumping up against prior kind of significant highs at this point, given the fact that they're multi-month resistance right in here around 122.50. So again, level to be aware of, but short-term trend is higher. Some short-term momentum is higher. So stick with that until it doesn't work or until it fails. Next, if we go to GLD, you can see it continues to hang up here as well. Excuse me, challenging these old February highs. Trend again remains higher here. Short term 820 still bullishly aligned. Dip buyers still kind of supporting GLD, and very similar to silver, which acts maybe even a little better. It's holding this gap nicely, and again, short term momentum is moving higher, coming back in to retest those February highs. I think you can stick with it until you see some type of trend change or some type of outsized move. USO getting a nice little sort of ignition here up to the upside, 2.27% higher, and again, that was after let's see, what was yesterday, 1.1% gain, and then on Monday was a small loss, but still had that turnaround similar to the S&P 500 to the broad markets. We talked about this trend line quite a bit. I've put out many blog posts on USO here, so it seems to be catching a bid right at that $10 level. Again, if you look at the futures contract, that I think that coincides with I don't even know, $46, $47 oil. Anyway, the point is it's a much cleaner chart than perhaps the ETF here, but still we're seeing a little bit of interest and a little bit of a bounce at this spot. Natural gas also continues to trend higher in this channel here, kind of accelerated steep channel to the upside, but continues to work. Again, stick with it until something changes. The trend is higher on the short term, so again, wait for something to change before you start changing the narrative there. And I think that is everything for the major markets. Let's look at some sectors. We'll start with GDX, actually. This is not one, we don't talk about gold miners too much, but I think they're at a pretty interesting point. So GDX here, if we zoom in just a little bit, and you can probably draw this a little bit better, but you have this trend line that's kind of extending down here from the February highs, and you can see we've bumped up against that finding some resistance there. I think what's interesting here is, we also found some support in here from March on this trend line, or if you extended this up, is where we bounced ultimately. And we're holding up here, and we're getting pretty tight in this sort of sideways consolidation now. You can see we've gone sideways for almost 2 weeks of trading, and this is going to start to resolve here one way or the other. So you're going to start to see, is this going to push through this trend line to 2350 and above and start to make its way back up to the February highs, or are we going to see a rollover and then a break of this trend line? I think this is at a pretty interesting inflection point, something worth paying attention to for a potential trade, breakout trade, really in either direction, depending on, and again, you could take a look back at that GLD chart and start to sort of extrapolate from there. But something to pay attention to, GDX, not something we usually talk about, but I think it's pretty actionable. Getting into some of the other individual sectors that are pretty interesting, XLY surging to new highs, closing at new highs today. Now, this is certainly helped by Amazon, which I believe is about a 15, well, maybe not that high. It's close to 15% weighting here in the discretionary ETF into XLY. So that's certainly a big influence on why this did so well today. But again, still something that's nice is that sector in general. XLK. Semiconductors continue to work. They continue to be the relative leaders. Semiconductors not really participating today, but they're still on a relative basis holding up very nicely. XLE was the big story today. So again, back to USO, finding some support at those levels. And again, we've talked about this quite a bit with individual posts and going back on a number of these videos. So you're seeing a strong thrust, nice volume yesterday. So we played this. Again, we've been very closely watching energy, and we've had some names, individual stocks in that play, in that space. But yesterday on this reversal, on this push back up through $69 and trying to reclaim this trend line, the first green day after 9 days. So I think this was the first day that it's been green. Nice uptick in volume yesterday. So that was our entry into ERX, which is the 3X bull ETF to the XLE essentially. And we got into that yesterday near the close. Saw a nice follow through today of 4% today. We took half of those profits off today, and we still have that position on. So again, like energy, nice push here, nice uptick in volume, finding some lows, undercut 69, which were the lows from March, and now it's pushing back above it. Definitely has its work cut out for it. It's been in a long-term downtrend here for multiple months, so I don't think it's going to be a super easy, clean trade to the upside, but another day or two of follow through is all I would look for on that quick trade that we put on there in ERX. And again, we have some other positions on in that space for the underlying stock. So energy carried the market nicely today. XLB materials, very strong thrust off of the lows here. So this was again Monday's gap down, breaking below support and then reclaiming it, seeing follow through. So nice healthy digestion here in materials. I think this is a very interesting space. Support clearly demonstrated. Now you could probably adjust this as you see fit, but you clearly have some demonstrated support. Nice healthy base hanging up near highs. Something to pay attention to is that's a space that could very quickly be at all-time highs again. XLV healthcare, we're still waiting to see kind of how this shakes out. This hasn't really got back moving to the upside here. It had this sell-off, and now it's just moving sideways very quietly over the past few sessions here. So really want to see if it can get back above $74.80, $75, continue the strong uptrend. Again, longer term, healthcare still looks good, so I'd want to pay attention to that. And then finally, XLF. On a relative basis now, one of the laggards, one of the weaker sectors out there. It is at support, so I'm not saying it's trash or it's going to roll over, but on a relative basis now, we're a little further away from previous highs than we are in some of those other sectors. So something to pay attention to, but like I say, we did just demonstrate some support here, retested that support. It held at $23 here in the XLF, so maybe start to nibble in some of those banks again if you've been waiting for pullbacks. Could be an option, but again, waiting for the dust to settle. And again, you can see the uptick in volume here over the past days. So something to consider, just keep an eye on that XLF. So that is the video. I hope you guys enjoyed. If you like the videos, subscribe to the YouTube channel, bottom right-hand corner. Otherwise, thank you so much, and talk to you again soon.